In this video, we're going to talk about the Wyckoff theory, how to trade it, and also, is there an easier way to trade it? If you haven't already, definitely smash the like, and let's get started. So this is Richard D. Wyckoff and his method and story. So he talks about a composite man. This is basically the market maker, who in theory sits behind the scenes and manipulates the stocks to your disadvantage. How can we get an advantage over the market maker or composite man? Well, let's go ahead and look to see what he has in store. There are 5 steps to approach the market. I'm not going to read these to you. I'm going to show you the schematics, and then we're also going to show you a chart. And then, is there an easier way? So, of course, you can read all this if you like. There's a whole bunch of stuff here, and then there's a lot of stuff to memorize if you choose so. Let's go ahead and look at the different Wyckoff price cycles. We have the accumulation, which is the oversold area. We have the markup, where the price is going up. We have the overbought, which is known as distribution area. Then, of course, we have the markdown. Now, if we come over here to the different schematics, this is accumulation. So this is the bottom part. Price is up here, price is coming down, and this is what we're looking at. We have phase A, B, C, D, and E. Now the E part, that's the fun part. I call this one the money part. Money. So we have all these abbreviations. What do they mean? Well, if you want to memorize them, they're all right here. Now I do have on my chart the abbreviations and also what they mean, so we don't have to spend too much time here. But the main key is in the schematic number 1, we have a spring. So notice the price action. Price comes down, comes up, comes down, then it does all this stuff. We have a rally, comes up, and then it creates a lower low, comes up and starts going sideways and kind of fades off a little bit, not breaking this high. Then it goes and it breaks this low. This is known as the spring. Now, again, this is the accumulation phase. Then we have the run up, the buy up, and then we have SOS, and then here's our money phase where we go moon mission. Now we have another schematic. Of course, here's all the information. You can easily look this up and write it down, memorize it if you like. For me, I make stuff really, really easy. This is the accumulation, and this is the schematic 2. Everything is the same with the exception of the spring. So price comes down, up, down. We have our little rally. Then it comes down, creates a lower low, and then kind of goes sideways, not breaking the high, going sideways, and then no spring. Goes sideways, sideways. We're waiting for the spring. Spring never happens. It starts going up, SOS, then the money phase. Remember, accumulation. When the price is up here, comes down, goes sideways. This is our accumulation. Now, let's go to the next phase. And of course, this explains all the phases. Once again, you can easily read this, memorize it if you like. For me, once again, I make everything super, super simple. And once you can pause it if you like. Here we go. So this is the distribution. Now, the price is down here and we're going up. We're creating highs or all-time highs. Now, the schematic 1 and 2 are very similar with one exception. This part right here. This, instead of it being down here for the spring, the UTAD, UTAD, this is the up thrust after distribution. So instead of the spring, we have the up thrust after distribution. Then we have the next schematic. This is distribution, schematic number 2. Price is down here. It's coming up, going sideways. And everything's here except for the up thrust. There's no, what was known in the accumulation phase as spring, there's no up thrust. It just goes sideways, sideways, and then starts coming down. Now, you may think that this looks very similar to some trades that we're in right now, or possibly even Bitcoin at this current moment of recording. We're also going to go as a bonus. What makes any pattern or schematic invalid? We're going to answer that for you because that is a very key point. Because if you are looking at this and you're saying, oh, this is a schematic number 2, there was no up thrust, It's coming down, it's breaking these levels, it's going to go down. What would cause this to be invalid? That question will be answered. If you haven't already, smash the like, guys. Smash the like. Here again, we have the different phases, A, B, C, and then of course we have D and E. This, you can read it, pause it, memorize it, do what you like. Now, let's go to the chart. This is the chart. Here is schematic number 2, which does not include the spring. Let's bring this over a little bit. And what we're going to do is we're going to notice all of the different phases. So phase A, and I actually have them color coded so it makes it a little bit easier. We have phase A, and on phase A, we have this PS, which stands for preliminary support. So price comes down, preliminary support, kind of gets support here, and then it continues coming down. This is the selling climax, basically the low, comes up for the automatic rally, trying to go, and then it comes back down. This is secondary retest, ST. Then, kind of comes up a little bit. However, this one did not make a higher high. Now, these do not have to go exactly the way it's done here. This is just a rough estimate of what the price action might do. Then we have the automatic rally, secondary test, coming down here for the ST phase B secondary test, which is this, where it goes a little bit lower than our low. And here I'm using the candle bodies, but you can see here, this one kind of goes right about there. Then it comes up to phase C, which is the last point of support before going to phase D. Now in phase D, we have this nice run up. That's the BU. Nice buy up. And we have the SOS, the signal of strength. The sign of strength is when it starts going sideways and it's not breaking down. Notice this. The lows are getting higher, but they don't have to. They can go sideways. And this is another smaller form of accumulation. Or if you do patterns, this could also be a bull flag or a bull pennant, depending on the price action. The main key is that it's not breaking the lows. That's the main key. Then we have the phase E. Remember what that one was, right? Money. Now for this, let's go to phase E. Meh, meh. What happened? Well, the price was right here when I was looking at this and when I drew all this out. And instead of depending on this pattern playing out, I go and I look at levels. Here is our main level that the price action needs to break before we can even think about entering. Because if we entered here trying to front run the phase E, according to the Wyckoff schematic number 2, we would be holding this way too long. So the way I trade is level by level. This is the level the price action needs to break. Here is my alert. My alert is set. What I was waiting for was the price action to come up, down, up, down, up. My alert gets triggered. I check the chart. I go on a lower time frame. Right now we're on the daily time frame, but I'll check the time frame and I'll look at this and I'll say, okay, well, it's gained support. We have several 4-hour candles closing above this, or at least one. Let's go to enter the trade because now it broke this and is gaining support. Versus relying on a schematic from Wyckoff, whether it's schematic 1 or 2, and entering here thinking that we're going to go to the moon. Every part of this chart has support resistance levels. We have support resistance right here. We have support resistance right here. And of course, right here. These are the levels that I need to break before thinking about entering this trade. This price can easily come up here, get rejected, and come down, or come up here, get rejected due to this, and then come down, or come up here, and then finally come down. Now, with this all being said, this is extremely important to understand that even though there are different schematics for the Wyckoff theory, trust your levels. You must trust your levels. Now let's go and look and see just what happened. Price came all the way down. And look at what I'm doing. I'm setting alerts. I'm setting alerts. Now, did I enter here or did I post it? No. Why? Look at these candle bodies. Nice candle bodies. Nice. Kind of small. Nice. Very tiny. Nice. And then it gets really small. Very super, just barely any candles. And then boom, a big old run up. How big was this one candle on the daily? This was almost 100%. If you enter on candles like this, there is an extremely high possibility it's going to come back to at least the 50% mark, if not greater. And this one did just that. It took all of its profits back. So whenever you see a candle like this, you want to wait. As bad as the FOMO feeling that you get, trading is very psychological. Trading, if you trade emotionally, you will fail. Fear, greed, anger, anxiety, jealousy. Man, jealousy is a huge one. But for me, my biggest emotion that I had was greed. And I wanted more and more and more. Now I've suppressed those emotions and I think logically when trading. Now to answer the question, because this right here will change the way you trade, whether you're trading patterns or schematics. For example, this one. This is a schematic number 2, Wyckoff theory. If the pattern, let's just look at this. Let's come back over here and let's look at these drawings. Here is what we're looking for. We need this to happen. This is our SOS. Here's our level. Now let's say the price action is here and it comes up. And let me go ahead and make this a little bit thicker so we can see that with all our drawings. If the price action comes up and it breaks this level, which it's supposed to do according to phase E, and then it starts going up and it's doing great. The schematic worked, everybody's making money, everybody's happy. And then we create a lower high, breaking this low, continuing breaking this lower or this other low. Because we re-enter the pattern, this is a failed schematic. Or if you were trading, see how it comes back into this as opposed to going up. Same thing if you were looking at any kind of pattern, whether it's an inverse head and shoulders. Let's say you do something like this, and here's our neckline. Let's just kind of draw our neckline really quick. Go from here to here. Go from here to here. Oh, I forgot. I had this opacity. There we go. So let's say we draw our trend line like so, and we break out of this. What would make this pattern invalid? If the price action comes back inside the pattern. Same thing if you have, let's say you have a falling wedge. And let's go and delete this. Price action is supposed to go up. Now, granted, there's certain percentages, depending on where you look at. Some say 68, some say 74, some say 72, just depending on where you're getting your information from. But regardless of the data, the price should, when it breaks out, it should go up. Doesn't mean that it has to, but the likelihood of it going up is greater. Once it goes up and gets a retest, that's great. It breaks this level as well. That's even better. And then if it comes back in, the pattern failed. This is a failed pattern. So with all this being said, do I trade the Wyckoff? No. And I showed you why. When I first started, I had a lot of mentors. And with the mentors, I was shown the Wyckoff theory. With the Wyckoff theory, I got wrecked because they didn't tell me that it doesn't work. They just showed me how it did work because all the examples that they showed me were working examples. And here I'm showing you that it doesn't. There are times where it doesn't work. Now, what's an easy way to look at all this? Okay, well, let's go ahead and do that because I do want to show you that you can trade stuff like this without using any schematic. Here was all the information just to verify. We're going to go and put this here. The start of the information is right around here. Now I'm going to show you how to trade this. We're on the daily time frame. What we do is we make sure that our magnet tool is on and we use our horizontal ray and we mark out levels. Here's a high. And let's say we didn't see this part. Let's go ahead and just double check one last time. Okay, so E is right around here. Let's go ahead and replay this. And just above it, it's out of view, but it's called the replay button. So let me go ahead and do this really quick. There we go. So this is the replay button right here. So with that being said, let's go ahead and put this back on. And what we're doing is we're seeing what was at the moment of this trade. Now we can see that we do have a level right here. We also have a level right here. And this is a really nice accumulation. Now, what I like to do is I like to draw a box around my accumulation. And I'm going from this high to this low. And this is our accumulation. Now, what we were looking for is we were looking for the break of this for us to enter the trade. However, we're seeing the price action right here. So what do? We're on the daily time frame. We can see the price went up really nice. It came back down, retested pretty much this area. Do we have a zone? Not a zone. Came down here in this area, but we can see that we have a lot of support. Price comes down and it stops. Price comes down and it stops. I'm looking at the candle bodies. Price came down and it stopped. Coming a little bit higher and it stopped. Came back to around the same area right here and it stopped. So this is telling me this level is very strong. And because of that level is very strong, I want to draw a box around it. So this is my very strong level. I don't want the price to break below this. You know, if it comes down in this box, it's fine. For example, if the price comes in like this, it's fine as long as we break out into the upside. If it goes to the downside, well, then now we're going to go back into this accumulation. And that's one thing I don't want. So I have to be patient. What does the price range tool tell me if I were to enter now? We're looking at 20% from about 23% before we hit this level. And for us to go to our major support level, about 25%. So we're dab smack in the middle. Would I enter this trade? This one's kind of a tough one. I really like this amount of support that I'm having here. So let's say the market is doing good right now. And again, this all depends on the market as well. You know what? I like how it's looking and it's bouncing in this area. I'm gonna go ahead and enter this trade. So I enter the trade right here. My blue is my entry. And what I'm also gonna do is I'm gonna set a lower entry right around here, about 18, 19%. This is my lower entry. Now, with that being said, it's extremely important to have more than one entry. You don't want to put 100% at one time. So I have a lower entry here. And then my stop loss, man, that's way too much. Now, this all depends on the market cap as well, but that's for another video. I strongly recommend everybody watch me. We go live every single day, Monday through Friday, 12 p.m. Eastern Standard Time, Saturday and Sunday at 5 p.m. Eastern Standard Time. And we also go live several times throughout the week, different time frames, or rather different times. Sometimes I go 12 a.m. Eastern Time, sometimes 9 p.m., sometimes 7. So you definitely want to have those notification bells on because sometimes we do some emergency videos and emergency live streams that are very important. My job is to make you money. And this is how I do it, showing you how to trade. So this one, because it's so far away, I have to wait because I don't want to have a stop loss of 30%. I would rather have a stop loss of about 13%. So I'm going to scratch this thought process. Now, one thing that I do is I show you how to trade in the moment versus after the fact. We know the price went down. It's no secret. If you like the fact that I teach you in the moment and you haven't already smashed a like, smash it for me, guys. Smash it for me and leave me a comment. Leave me a comment, several comments if you like, regarding the Wyckoff theory. Do you use the Wyckoff theory? Have you used it? Has it worked for you in the past? The way I'm showing you right now, is it a little bit easier than remembering the ST and the BY, I'm sorry, the BU, the buy up, the spring, and some don't have the spring, some have the where it's in the distribution. Is this a little bit easier? Let me know in the comments. So right now, I'm not going to enter because this stop loss is just way too much for me having a stop loss here. So what I'm going to do is I'm going to put a stop loss right here. And what I recommend everybody do is do this, map this stuff out. See if your thought process plays out. I like it. It's up here. It came down. It's an accumulation. How long was it an accumulation for? Accumulation was approximately 96 days. Man, that's a long time. So because of that, I am very confident it's going to go up. And it did go up. And now it's retesting this, which is good. I want to see where it's going to go. Is it going to come up, break this level, find support, then I can enter the trade? Or is it going to come down one more time, get into this box, and then go up? Well, let's find out. Of course, we already know what happened. So right now it's going up. Okay. So my lower entry hit and it came down. Got stopped out very fast, a few days later. Now there's a couple of different ways we could have done this. One is having an entry lower, which I did, and I immediately got stopped out. If you notice that you're putting lower entries and immediately getting stopped out within the first few hours or days, problem, you're getting stopped out too many times. Solution, don't have a lower entry. Instead, have an alert. So what you can do instead, set your alert. Your alert goes off. You get notified. You check the chart and you say, whoa, man, it's coming down. It might lose the support. Let me wait. Let me wait and see what happens. Then you notice price coming down. It's like, man, I would have been stopped out. I'm glad I didn't do a lower entry. And now what you do is you move over your alert. So it reactivates. Of course, to activate it, you click on this, but we can't do a replay. We can't do an alert on a replay. But what you would do is your alert is right here. So you would click on this to add the alert. We can't do that because we're in the replay. And we would just move it right here. So as the price comes back up, breaks above this major resistance, now we look at this and we say, oh, okay. Yeah, I like how it's looking now. We have, let me go ahead and do this. So let me delete this as well. And now, let's say price comes up, our alert goes off. And because it just went straight up, we want to wait. And then we can get our alert and then move it up. Because let's see if it breaks out of the box. Price goes, our alert went off, we move the alert, comes back down, retest beautifully on this really nice support, which was resistance, really nice support, breaks above our little box. Now we can enter the trade knowing that if it comes down, hopefully we have really nice support here, very nice, strong support. We enter the trade here, we get a retrace, starts coming up, breaks this level, we can add to our entry here, or if you're a little bit higher risk, you can enter the trade here on a lower time frame. I show you how to do all this stuff. Make sure to watch me every single day, Monday through Friday, Saturday and Sunday, different times. Then let's see what happens. Let's go and hit the play button. And our alert is set. We're waiting and waiting and waiting. We already know the outcome. Let's go ahead and click on the X over here. Yes, we want to wait. We want to cancel it. And now we are not in the trade longer than we want to be. In addition to that, price was about here, I want to say. In addition to that, we did not go down 75%. This was my problem. I bought in so many times and so many coins. At one point, I had around 85 coins, and around 72 of them were the Wyckoff theory because of my mentor. Now, granted, do I blame him? No. I'm very grateful for him. Granted, he cost me a lot of money, but I'm very grateful for him because I learned what not to do. It was very expensive on my end because he didn't tell me or advise me. But when you touch the stove and it's hot, you learn faster by actually doing it. I lost so much money. I would never trade the Wyckoff theory again because I have my levels. It breaks the level, I enter. Doesn't break the level, I wait. And because I set alerts, I enter trades much faster and get profits much faster. And I'm not waiting for this. So by setting alerts, doing my levels, I'm reducing my time that I'm in a trade. I'm increasing my profits because I'm not getting stopped out. Do I lose? Sure. Do I win more than I lose? Better believe it. For all these rules that I'm showing you, and it does not include Wyckoff or patterns. Now, let's see here. How long would I have been in the trade? Let's just say we entered here, even though it was a little bit sooner. I would have been waiting 80 days. I don't know about you, but I could be setting alerts on other trades and making money versus waiting. This is what I do, guys, every single day, Monday through Friday. I do this at 12 p.m. Eastern Standard Time, Saturday and Sunday, 5 p.m. Eastern Standard Time. If you haven't already, smash that like. Let me know you enjoy the content. Let YouTube know you enjoy the content by leaving a comment. Once again, do you trade the Wyckoff? Have you seen the Wyckoff? Did you know about the Wyckoff? I don't trade it. I've lost way too much money. I trade on support, resistance, and also I set my alerts. There's other methods that I use to trade. Make sure to tune in every single day. We'll see you on the next video. Until then, my name is Joe, also known as Trade Intuition. My goal is to make you money. And if you want to reach out to me and join the group to where you learn faster, you make more money, not financial advice. You make more money because you're learning faster. I give you the chart setups with the exact price to enter. Also, we move up our stop losses. I don't post 10, 15, 20 charts a day like all these other groups. They do that and they are stepping on your back to elevate themselves so they can look good when 3 or 4 of their charts play out and they've done 80, 120 charts a week. I show you how to successfully trade. Now, can you learn this without joining the group? Sure. Ask me questions on the live streams. I will make you money, not financial advice. But if you want to join the group and learn faster, here you go. Reach out to me, trade_intuition. I'm here for you. I want to make money with you. And if you want to make money faster, you have the answer. I have nothing to sell you. This is an offer. If you want it, great. If not, join me every day. We will dominate this market. My name is Joe, also known as Trade Intuition. We'll see you on the next video. As always, let's make this money.